Hello guys, welcome back again to my YouTube channel. In today's video, I'm going to be teaching you guys how to understand my strategy from scratch and also show you guys the best strategy I've actually been working for VIX 25 index and then VIX 75 and then VIX 75 1 second. The strategy actually works for those pair best. So don't forget to hit the like button and subscribe to this YouTube channel. I remain your one and only best Forex trading coach. Don't forget to share my videos to as many people as possible. Share them with your friends. Like, subscribe, and also follow us on the Telegram channel. Mind you guys, I also provide account management, mentorship, and I also provide signals. So let me take you guys to my VIP group. Right here, guys, you can see that we are on the VIX jump 25 index trade. Okay, so here we are. We just entered this morning. It's been a bit slow, but it's gonna move. Okay, so I shared the setup with them this morning and we are all in on this trade. So don't forget, we also have the boom 1000, the boom 500 setup, and it's not yet on our PY, but we are actually waiting for it to get there. Then we are going to go all in. Okay, so for the past week, I've been holding the 25 index. So I'm going to show you guys the setup and also share it with them 3 days prior to us taking the trade. And this is the VIX 10 index. We just entered last night, and so far it's actually doing well. You understand? It's not going to move all at once. It's not going to drop. It's not, you understand? It's not rocket. So it takes patience, guys. So it's going to play out. So this is the trade this morning. So this is when we entered it last night. So I shared everything with my VIP members. So this is when I was actually expecting my confirmation, and I actually gave it to them upon me seeing the confirmation. So we have other setups that are to play out. So we are following that. So in case I don't give the setup and I'm not available to actually give the trade, you guys can actually follow the trade setup based on what I teach. All right, so this is the VIX 751 seconds. We actually missed our entry based on the fact that I did not see this particular area. Okay, so the trade played out to our TP. All right, so we also have VIX 75 index, which we are waiting for. It does not come to our play, and then we have this one that actually hit our stop loss and then decided to go hit our TP. So remember, this is the trade. This is the setup I was actually waiting for, not knowing that it has actually played out. All right, so but that's okay. You understand? You must not get everything right. So this is VIX 101 seconds. It's almost hitting TP, but we are out on at a break even because we break even too soon. And this is a trade which we miss. So blah 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 and all that. So it's good for you to be at this LIKEMINDFX VIP. All right, you're going to make money, and you're also going to understand the strategy if you don't have money for mentorship. Okay, so we also have a chat group where people discuss. So this is the VIX 101 second setup. Okay, so I think I gave it to them 3 days of 4 days prior. So that's enough. Let's go back to why we are here for today's video. Okay, so I'm going to break everything down for you guys. So let's go ahead. Don't forget, I remain your one and only trading coach. Okay, LIKEMINDFX. So right here we have a blank slate. All right, so we're going to put meaning to this blank slate. All right, so this strategy, I want to use my best way I can to actually make you understand this trading strategy. Please pay attention. Don't be distracted. Put away anything that's distracting you. You understand? Just focus, fam. So right now, let's say the market is what, in an uptrend. Okay, so if the market is what, in an uptrend, okay, what do you expect to see? The market is in an uptrend. Okay, what do you expect to see? The market is going to create a low. All right, when it creates this low, what do you expect to see? Market is going to create a high. So oftentimes that high is false, being that it's a liquidity sweep. Since the high is false, it's meant to what? Induce people to actually want to sell at that area. People who think that, okay, this high is a double top. So since it's a double top, we are going to sell from here. All right. expect it down. And also there are buyers below here who are actually anticipating upward price movement. So what happened? The market takes out those sellers who are actually selling there, all right, and also come back and take the buyers who are actually buying there and whose stop loss is below. All right, hope you're following. So now we are just building we're just building to the strategy so that you understand every move for this particular strategy has a meaning. Okay, so we have the sweep, all right, and this return that actually sweeps what? The sellers. Okay, takes the sellers, and then after taking the sellers, we have a pullback. Okay, we have what? A pullback. Sorry, let me delete this, not that. So we have a pullback that creates what? Structural liquidity, and then we have another move to the downside. So now this particular strategy is actually very simple because it gives you it helps you to understand every move the market is actually doing. Okay, so it helps you to understand every move the market is doing. So we have a low, then the market creates a high, and then a false high, which leads to what? A break of this area, which is a sweep of what? Liquidity. All right, so we're just going to go ahead and mark that to be our sweep of what? Liquidity. So just label that XXX, so liquidity sweep. So since that's a sweep of liquidity, that gives us what? A break of what? Structure right here. So this is our break of structure. Right, I'm just going to use capital letters instead. All right, so this is our break of structure. And another one, we have this pullback, which is what? Our structural liquidity. All right, and next we have another break of structure right here. So this strategy, you must have two break of structure, and then this move, this pullback here, has to be at least 50%. Okay, so this one is more than 50%. We have about 70%, 60%. So it must be at least 50%, 60, which is good, 50, 60, which is good, or above. So, but it should not be too close to the sweep, liquidity sweep, which is going to be what? Our entry area. We're going to mark our PI. So it should not be too close to that. All right, it should not be too close, it should not be too far. So, and now this becomes what? My protected high. Okay, so this is my protected high, this is my sweep of liquidity, and this is my protected low. So what happened? I'm going to wait for the market to return to this area, grab the liquidity, tap into that area. And what happened? Within this area, I want to see some reaction. Okay, those reaction is going to the reaction in that area is going to determine what? My action. So in physics, we are taught that action, reaction are equal and opposite. So the reaction, how the market is going to react there, is going to determine my reaction, if I'm going to buy or if I'm going to stay out of it. Okay, and if the market does not provide any reaction, and then I go and buy, what will happen? I'll end up losing money. So you have to stay disciplined and stay out if you don't get any reaction from the market in that particular zone. Okay, so what happened? The market, in case the market gives us a reaction and you sell, you're going to make money. If it does not give us a reaction and then you sell, you're going to lose money. You're going to keep pushing to the upside. So that must also align for you to make money using this particular strategy. I hope you understand. So I'm the best Forex coach, fam. I'm the best Forex coach. I will teach you this thing in order that you understand it. Even a newborn can actually understand my teachings. So let's look at another scenario. Okay, in this particular scenario, I use it to trade the VIX 25 index, and we are going to go to that one. Simple. All right. So now for the VIX 25 index, we have this particular type of setup. Okay. For that particular case, we have this area. We have an internal structural liquidity. So something like this. We have something like this. So I'm going to explain why that happened, okay? And why did I take the trade knowing that, okay, we have an internal structural liquidity, okay? Why did I take the trade? So I think to be able to understand that, I have to delete all this. In fact, let them be there because you still understand. So now we have what? We have this internal structural liquidity, all right, that gave a structural, we have that. And the reason why we take this trade is that this particular low, this area right here, was actually taken out, okay? If, let's say, the market just took out this one, this low right here, all right, and then went back, no, I don't want that kind of trade, though. It will not give me money, you understand? I'm scared of those kind of trades, you understand? So I want the one that will actually take out this particular low here, all right? So I want the one that will take out this low here, okay? All right. So invariably, what that tells us is that the structural liquidity, the low has actually been taken out. That's this internal low has actually been taken out. Let's take this here. So, and then the overall low of this structure, okay, has actually been what? Taken out. So therefore, that strategy, this becomes what? A valid setup. Okay. So that's why we took it. Okay. So, but we'll go back to all that. So that's why we took it upon confirmation. So now let's look at another example, another model entirely that I've actually been testing for the VIX 75 and the VIX 75, the 75 index and 25 index. So, and VIX 75 and 25, yeah. So for that one, this model actually looks like this. You must have seen it in one of my videos, but I've just been testing it. We have this, and then we have this market structures. Now, let me use something else so that you will understand. Okay, let me project it like this. Now the market is actually pushing to the downside. Okay, pushing to the downside. Okay, and then it's pushing to the downside, and then you now have let's say you now have something like this. Yeah. So this indicates what? A market structure shift. Okay, and then something like this. So now this model, it works like this. Let's say, yeah, you can use it for continuation. Yeah, you can use it. Let's say a trend is actually pushing to the upside. You want to actually enter. You want to find your way inside. So you can use this particular model. All right. Let me zoom this a little bit because I have some things to actually explain to the left here. All right. So now let's say here we have a small bullish candle. Let's say bullish. Small bullish candle, right? So do I increase the color? No, I don't want to, because you still understand. And then we'll have a very large bearish candle. That is our order block. That looks like another block, okay? But you understand more when we go back to the chart. So this, within this area right here, you want to see this guy here. Okay, so now we have a break. This we call market structure shift. Okay, so and then we have this right here. We have this right here. This is a break of structure. Okay, this is a break of what? Structure. So we have a break of structure, and then we have a market structure shift. So my mentorship is just $70. Okay, $70. All right, and that gives you access to my VIP group as well. So we have a market structure shift, we have a break of structure, and here we're going to call this guy inducement. So why we call it inducement is because it's going to attract price. Okay, it's going to attract price. It's just like honey. Honey will always attract flies, you understand? So this guy is just like honey. Honey will always attract flies. So now this here, this our breaker block is right here. Okay, so let me just carry this back. Right, so now what happens? You see that this market will come here and then tap into this area and it will buy. And please don't buy blindly. All right, you look for confirmation. Okay, you look for confirmation, then you take your buys. All right, you can look for confirmations on the 15 minutes, 5 minutes, you take your buys. So now let's go to the VIX 25 index. Let's look at this particular model. All right, then we look at the VIX 25 and so on. So from the 4 hours time frame, we can see that, okay, this market is actually pushing to the downside. All right, so I would have marked here my market structure shift, but I'm going to mark here. Okay, that's my market structure shift. I hope you are following. Let me explain this so that even the layman can actually understand. We have our market structure shift. All right, so we're going to mark out our breaker block. So now the purpose of this candle is that if price comes back to it, it will continue to what? Push to the downside. Now the purpose is another block. Okay, so now if this price come back to it, it's supposed to continue to push to the downside. Now, but since price breaks out from it, itself the reverse purpose of it, so it becomes what? A breaker block. So now see how the market came back to it after we have a market structure shift, and then we are going to draw our honeypot, which is the inducement area. Okay, so this is our inducement. These are inducements. So now we're going to go to the 1 hour time frame and look for entries, look for confirmations. That's where we look for entries. Okay, so now we are on the 1 hour time frame. What are we looking for? We are looking for confirmations, but I'm not going to give you every secret. If you are smart, you actually get those secrets. Now we have our break of structure here, which makes the setup more valid. Okay, so we have a market structure shift. We have this confirmation right here. So here you enter. All right, stop loss just a bit below, and then you can target this area right here to the left there and target that area. So you see, you hit your target swift and smooth, simple. All right, now let's look at another one, the VIX 75 index. I'll look, and I think I'll love to find one. I've not actually studied it too much on the VIX 75, but I know it works because I've seen it once or twice. So now this market is actually moving to the upside. Remember, when explaining, I talked about continuation. Like, let's say you know that, okay, this market is actually moving to the upside, and then you're trying to look for continuation. All right, so right here, we're just going to scale down a little bit, all right, and look for this thing. Okay, look for this thing. All right, now let's look at this particular area. You know that the market is actually moving to the upside. Let's go to the 15. Now let's use the 30 minutes time frame first, then we'll scale down to the 15 minutes time frame. But we are looking at this area here in particular. Okay, so now I've seen it twice. In this particular move. Okay, now but I'm going to explain it to you, all right, so that you guys can also understand, because your eyesight and mine are not the same. So now look at here, we have what? Market structure shift, right? So we label this MSS. Sorry, I think I did not click on it before. MSS. Okay, so that's a market structure shift. We're just gonna just start a bit. Okay, so since we have our market structure shift, where is our inducement? This guy is our honeypot. Okay, it will always attract price. Okay, so this is the inducement. All right, it attracts, its purpose is to attract price. So now, where is my breaker block? So there are many breaker blocks right here, but I want to pick the one that is closest to price. So here is a breaker block. All right, so see, there are times whereby it's at least one will fail, but the other one will hold up. Okay, it happens to me most especially on gold. So I will see this. I think I would like to use this one right here. So this is a breaker block. All right, so now price must not, for instance, as the market is moving, okay, market must not come back and touch it then continue. No, it must not. The inducement should not touch it. Okay, the inducement should not touch that area. So all right, the inducement should not touch that area. So it should be close. Sometimes it should be far small, just like that, but it should not be too perfect. You understand? Because you cannot always get it so perfect. So in case that one fails, we target this guy here, target this one. If that one fails, we target this one. But that's why you need confirmation. Confirmation will tell you when to actually enter or when not to enter. All right, so Now let's go to the 15 minutes. My screen is actually hooking up. All right, so on the 15 minutes, all right, let me adjust this back. On the 15 minutes, we can actually see some things there. We see that 15 minutes candle, but still yet I won't enter until this market breaks out from this area. So once the market breaks out from that area, I can actually go in, all right, with my stop loss below the wick of the candle that actually caused that break, and then to the upside. So same thing happened here. We have that area being swept. All right, we have our breaker block right here. All right, so if you check close enough, let's see this particular area on the 30 minutes. Let's go back to 30 minutes. We're going to pick a breaker block that actually fit this. All right, so let's go. Okay, so to the left here, you see that we have a breaker block. Sometimes it happens here, sometimes far back. Okay, so see, that's our breaker block. And just adjust this a little bit. See our inducement level. You know the rest is history, man. The rest is history. All right, so you know the rest is just history. Okay, so we have an inducement. We have that area being swept. We have this area. We have this area which is the shift. All right, there's our shift of market structure shift. Okay, that's the market structure shift. We have our breaker structure, and then our honey pot. Then now let's go to 5 minutes time frame. Can we see entries? Can we see confirmations on the 5 minutes time frame? Is a thing of question. Okay, so you have to backtest this. Not just that I just give you this now and you just go and start trying to use it. Okay, so this, yeah, is enough. We have this engulfing candle. At the close of that engulfing candle, you are free to write this motherfucker. So you see that it's just good stuff. I'm giving you good stuff for free, fam. I'm giving you good stuff for free. So you see, it hits our target. You don't have to be too greedy. Now let's look at the VIX 25 index. Why do we sell the VIX 25 index? Okay, so we are going to look at the two examples I actually explained on the VIX 25 and the VIX 100. 1 seconds. Let's look at the 4 hours. 4 hours. Will this 4 hours be too much? Okay, now we are on the 4 hours. 4 hours it doesn't give us enough room to actually view the market the way it is. The 1 hour is actually perfect. Okay, on the 1 hour here, we have what? This guy swept this area. So we have the market creating a low, which was expected to give us lower low, but no. What happened? It came back up, swept this area. Okay, we call that what? This nigga X. Nigga X is a stop loss hunter. His own is to eliminate sellers from the market. Okay, so nigga X eliminates sellers from the market. Okay, also here we have structure break. We have market structure shift. That's what I call this. Okay, so now we have this internal structure, our liquidity. Okay, this guy is our friend. His own is more like the inducement guy, but he attracts prices too. He's just like honey. So now this move, if the market did not actually take out this low, if this move did not take out this low before coming back, to be invalid. Okay, so now when did it become valid? When we have a sweep of this low, it became what? Valid. Have our breaker structure. So remember, I took my time to actually explain it. So where's my PY? My PY is just this other block handle there, right there. So remember, it swept, but it still gave me a confirmation. So as soon as I had that confirmation, I went all in, fam. So that's that. It's just simple. If you still find it difficult, come to my mentorship class. Just one session, you get it clear. It's just $70. You can afford it, fam. You can what? Afford it. So simple. It's not like the price is too expensive. Okay, so this is it. Let's look at the 101 seconds. I think this video is actually getting too long. Let's look at the VIX 101 seconds lastly. Okay, so on the VIX 101 seconds, let me make this simple for me and you because I don't want actually running out of time. Yeah. So yeah. So the reason why we sold here is because we have this area right here. We have that sweep, we have this break of structure, and we have this pullback, and then we have the second break of structure right here. So that's the reason why we sold, but price came back and took us out. If I knew, I wouldn't have told them to break even. So, but now I wouldn't have told them to break even. Okay, so that's why we actually sold. So now the main area which I'm actually targeting is this area. So I was actually anticipating price to come to here, all right, but this was also an internal structural liquidity that like the VIX 25, but we have a break of this area, okay, which makes it valid. So now the reason I want price to actually come here and then again my reaction, why? Because we have a sweep, okay, we have an internal, we have market structure shift. Let's do this together. So we have a sweep of liquidity. We call this guy X, which eliminates what? Sellers from the market. So the eliminator, okay. So now we have a market structure shift. Why? Because the particular structure has actually been swept, and then we call this guy market structure shift, and then we have our structural liquidity, and finally we have the break of structure here. All right, so since we have a break of structure, our viewers, what happens? We're actually expecting this market to actually come back and then sweep the structural liquidity, give us a confirmation, then we buy. So this is just as simple as ABC, guys. You can actually practice this on your own. Don't forget to hit the like button and subscribe to this YouTube channel for more and more videos like this. So it's just simple stuff. You too can do it. It's not too cumbersome. So have a